Every year, millions of retirees hand the government more than they actually have to. Not because they cheated, not because they missed some clever loophole, but because the moment you turn 65, the tax rules quietly change in your favor and nobody sits you down and reads you the list. So that's what I'm going to do right now. 6 things that switch on at 65 that a lot of people never claim. No tricks, no gray areas, just breaks that are already written into the law with your name on them. Let me be clear about one thing up front because you'll hear this told wrong all over the internet. You don't magically stop owing taxes at 65. That's not how it works, and anybody who tells you that is going to get you in trouble. What actually happens is better and simpler. The government starts letting you keep more before it taxes you. Bigger deductions, higher thresholds, penalties that fall away. Add them up, and for a lot of retirees, it's real money sitting on the table every single April. Let's go through them. Number 1, the extra standard deduction. Almost everyone takes the standard deduction now instead of itemizing. And once you turn 65, yours gets bigger. Automatically. For 2026, that's an extra $2,050 if you're single, or $1,650 for each spouse who's 65 or older on a joint return. It creeps up a little every year with inflation. You don't apply for it, you don't dig for it. You check a box on the form that says you're 65 or older, and your deduction goes up. But if you or whoever files your return skips that box, you just quietly overpaid. It happens more than you'd think. Number 2, and this one is brand new, so most people haven't caught up to it yet. Starting with the 2025 tax year, if you're 65 or older, there's an additional deduction on top of everything else. $6,000 per person. $12,000 for a couple where both of you qualify. It came out of the tax bill signed in 2025, and it's scheduled to run through 2028. There's an income limit. It starts phasing out once your income goes above $75,000 if you're single, or $150,000 for a couple. But for a huge number of retirees living on Social Security and modest withdrawals, it lands squarely in reach. Now, I put together a plain English guide to all of this, including which of these 6 you actually qualify for and how they stack together, in my book, You Don't Need $2 Million. It's a few dollars, it's not a course, and the link is waiting for you down below whenever you want it. That's the only time I'll mention it. Let's keep going, because the next 4 are where people leave the most on the table. Number 3, you might not have to file a tax return at all. Here's something almost nobody realizes. Seniors get to earn more than younger people before the IRS requires you to file anything. A couple $1,000s more, just for being 65 or older. For some retirees whose income is mostly Social Security plus a little bit on the side, that higher threshold means the honest answer is you're not required to file a return this year. Now, sometimes you'll want to file anyway, to get back money that was withheld or to claim a credit. But being forced to file and paying someone to do it when the law says you don't have to, that's a mistake worth catching. Number 4, your health savings account stops punishing you. If you built up an HSA during your working years, listen closely. Before 65, if you pull that money out for anything other than a medical expense, you get hit with income tax plus a 20% penalty. That penalty is steep and it scares people off. The day you turn 65, that 20% penalty disappears. Gone. After that, you can pull HSA money out for any reason at all, and you only pay ordinary income tax on it, exactly like a regular retirement account. And if you do use it for medical costs, including your Medicare Part B and Part D premiums, it's still completely tax-free. So at 65, that account quietly turns into one of the most flexible pots of money you own. Number 5. This one's narrower, so I want to be straight with you about it. There's a specific credit called the Credit for the Elderly or Disabled. It's aimed at older Americans with lower incomes, and if you qualify, it directly reduces the tax you owe, dollar for dollar. The catch is that the income limits on it are genuinely low, so a lot of people won't clear the bar. But here's why I'm including it anyway. The folks who do qualify are exactly the ones who can least afford to miss it, and it's one of the most overlooked credits on the entire return. So if your income is modest, it costs you nothing to check. That's the whole point of a list like this. Catch the one that applies to you. And number 6, the IRS will do your taxes for you.
What exactly
for free.
does this clause mean for the beneficiary?
Most people have
Just
no idea
ensures
this
the
exists.
distribution is handled
There's a
according to the
program called
updated
Tax
guidelines.
Counseling for the Elderly, built specifically for people 60 and over. Trained volunteers will sit down with you, walk through your return, and file it electronically, and they specialize in exactly the retirement stuff that trips people up. Pensions, Social Security, withdrawals. If you've been paying a preparer a couple $100s a year for a straightforward return, that's money you may not need to spend at all. So let's step back. None of these are loopholes. Nobody's hiding them from you. They're just spread across the tax code in a way that no one bothers to hand you on a single page. A bigger deduction, a new $6,000 one, a higher bar before you even have to file, an account that stops penalizing you, a credit for those who need it most, and free help to pull it all together. One honest caveat, and I mean this: your situation is your own. Which of these 6 actually applies to you depends on your income, your accounts, and your filing status. So run the ones that fit past your tax person before you count on them. This is the list to walk in with, not a substitute for your own numbers. But now you know the list exists. And that alone puts you ahead of most people your age, who will file this year exactly like they did at 50 and never realize the rules changed in their favor. If you want the full walkthrough, the one that shows you how to figure out which of these 6 are yours to claim, my book, You Don't Need 2 Million, is linked right below. And if this was useful, stick around. The next one is about the single tax mistake that quietly costs retirees the most, and how 10 minutes can undo it. I'll see you there.